Hi, this is Osama Rizvi from Primary Vision Network, and welcome to another episode of the Monday Macro View. Today, I'm going to talk about there was a recent report by World Bank released in June that speaks about the global economic outlook, and I think it is very important, as we have been discussing these themes quite a lot. It is very important to see where the global economy is headed according to these outlooks and estimates. Secondly, also anything more on OPEC, what's happening, what has entailed after the cuts, because there is still a lot of confusion, and oil prices frankly hasn't responded well. In that many people who were expecting that there will be increase and uptick in oil prices have been disappointed. So why is the case? So first slide, as you can see on your screens right now, so the global economic growth is expected to slow down to 3.1% this year. After growing 3.1%, it is expected to slow down to 2.1%. My apologies. And what are the factors behind this? It's continued monetary policy acceleration in many countries of the world. It is inflation, high inflation, stubborn inflation, sticky inflation, and overall, other factors that have been leading to lower freight volumes, as we've been discussing in the previous shows as well. Adding to these concerns were recently the banking concerns, the tightening concerns, the lending concerns, about which we spoke in the last Monday Macro View. And all of these factors, the report said, has sort of created an environment where World Bank does not see quite a significant improvement in the global economy. That said, I mean, they have mentioned that there would be a pickup in Chinese economy. However, that seems a little bit off, because given the recent economic indicators, we all know that things have not been going as expected there, at least in relative terms. So we'll see. We'll wait and watch what happens. Another part which I always have spoken about and have written about as well, they are the emerging markets and developing economies, the low and middle income countries, and what's happening in that part of the world, because frankly, that is the region, that is the part of the countries, the group of the countries that is going to lead the growth, economic growth in the medium to longer run. So growth in EMDEs is expected to average around 3.4%, which is one of the weakest in the past 30 years, 3 decades. Why? There are lots of headwinds. First of all, rising dollar and the continued monetary policy acceleration by Fed, that has rendered many countries across the world quite weak. There has been huge devaluation, so pressures have built on the external front. Then there are global tightening global financial conditions. Many of the countries have been reduced down in their credit ratings, as you can see on this left-hand side of the chart. So, I mean, there's a lot of challenges for the low and middle income countries, for the EMDEs. Many countries like Pakistan, they are going for debt restructuring programs and IMF and whatnot. We have seen the case of Sri Lanka recently. Pakistan is still on the brink of default, by the way. So 14 out of 28 LICs that were assessed are in debt distress or at a high risk of debt distress. So that speaks a lot about the overall problems, and how problems in the advanced economies are always disproportionately and more pronouncedly showing themselves in these economies. So, and the next slide talks about something very relevant, and also that we were discussing previously in our show. Though the expressions of the global supply chains, they seem to have, as you can see, normalized a little bit compared to pre-pandemic levels, but trade is expected to remain slow. Why? Because of the factors that we've just talked about. The recovery in China, according to the report, is expected to be predominantly driven by services, quote unquote, and through demand for goods and commodities. And we have seen right now the real-time data shows opposite to that. It's contrary to this. The next slide speaks about the commodity prices, and this is where we make a good segue into the OPEC debate as well. So commodity prices have returned to their pre-pandemic, pre-invasion levels. although the reason for that is not the normalization of the market, it is very important to actually realize why a thing is happening. So the reason is slowing demand, slow demand growth. It's not that, okay, everyone has realized that there was a lot of dollars being there was a lot of dollars as a risk premium added into various commodities across the world. It is because the demand has slowed down, and this has been especially the case in natural gas and also specifically the oil markets. And uh, when we talk about oil, we see that OPEC plus cuts have not induced the reactions from in terms of prices. Um, I've said it before as well. We will see another sort of a geopolitical, not a rift, but some sort of skirmish between US, Saudi Arabia, and Russia. Saudi Arabia wants higher oil prices. Russia wants to keep selling its oil, which in the context of a low demand cycle will slow down the oil prices, and the US also wants lower oil prices. So you see two of the countries that don't go really well, they are on the same page inadvertently in terms of oil prices, while Saudi Arabia is on the other side. So latest report by S&P Global Platts, it showed that OPEC Plus they have managed to cut down 670,000 barrels per day in the first month of the expanded voluntary cuts. That has put the compliance level, as you can see in the second slide here, to about 192%, one of the highest ever. But we will see how will this continue, or whether this will continue or not moving forward, given the interest rates are still hiking. What will happen? Will the US enter a recession? Will the world enter a recession or not? And etc. There are many factors that we can't just really cover at the moment here right now. Finally, the market sentiment tracker. There's a lot of positive news building up as well. Job report: India's economy is expected to outshine that of China. Mexico and Brazil have posted growth. Asia's oil export have recovered. We just spoke about it last week. Russia's gasoline exports have also risen 37%. But once again, the left side, as you can see, the ISM manufacturing indices, volume of business investment spending is declining. Oil markets are shifting cycle, as we've just spoken about. So most of the indicators on the left side, the recessionary side, the bearish side, are also piling up. It's a seesaw thing, and we'll see where does the market settle down. But for me, the outlook still looks bearish. Thank you so much for watching Monday Macro V. I'll see you all next time. Thank you.